Let's take a closer look now at the levels investors need to watch from here. Joining us on the phone, Jonathan Krinsky, Chief Market Technician at BTIG. Jonathan, great to have your take. What are you seeing in the charts right now?
Yeah, thanks, Melissa. So one of the things we've been kind of talking about is the lack of full capitulation that we've seen. Despite the fact that the market's down substantially year to date, we actually have not seen a major distribution day, which we would define as 90% of all NYSE volume occurring in declining stocks. And we got close to that in the open today, but we're not there at the current time. And so really, in order to get one of those type of days, you need to see all pretty much those materials, some of the cyclicals, and so those are getting hit. But we're seeing a little bit of an offset by some of the high growth, long duration sectors that have been beaten down. So we're not getting that full capitulation today, but I think the bigger picture and something that investors need to kind of reset their expectations for is that there's an element of time to corrections. And I think the COVID crash was kind of the anomaly. It only took 23 trading days from high to low for it to be over. And that's really not, what most corrections, the duration lasts. If we look at 2010 and 2011, those corrections were 4 and 5 months in duration from peak to trough, and 2015 into 2016 was 8 months. So I just think there's a bit of an expectation reset that needs to happen, as well as a bit of a bigger capitulatory flush.
What do you make of the bounce that we're seeing? You mentioned long duration names, some of the more, the innovation kind of names, the higher multiple sort of names. I mean, can you see a capitulation within a sector, even if the broader sector has not capitulated?
Yeah, that's the bullish argument, is that it's kind of a first in, first out type of situation where a lot of these names that peaked, the ARC names peaked over a year ago, are finally seeing some sort of bottom. I don't know that we're there yet. I don't think one day can tell you that. I think a lot of it is position squaring. As I mentioned, the areas that have held up the best are doing the worst today, year to date, and vice versa. And so I think it's a lot of position squaring. That can be an early signal that we're trying to find some sort of bottom. But again, if you look back, throughout history, it would be almost unprecedented to see a final low that didn't occur with at least 190% down day, and we haven't seen one of those yet year to date, which is pretty astonishing.